Lululemon just released their latest quarterly figures. It was a pretty strong quarter. Guidance was a bit mixed, but all in all, the market seems to be happy with the yoga pants company. At the time of making this video, the stock is up 9.15% after hours. Big difference to UiPath, which we also just covered. UiPath was a bit across the board, guidance as well. But I guess the tone just wasn't there and the stock was down 7% or so. But okay, Lululemon here up 9.15% to now $376.3. In the last 3 months, this stock is up now close to 40%. Of course, year to date, it has been underperforming. All in all, if we zoom out, Lululemon as a business has done quite well. I would say it's a pretty strong business. We now have a market cap closer to $45 billion and a forward PE of 24 times, EV to sales 3.9 times. Now, if you look at the expected growth rates, top and bottom line, high single digit sales growth, EPS about the same, I would say. So yeah, it really depends on whether or not you want to get exposure to such a business, or if you also believe that, well, the North American business is going to reaccelerate, because that's one part that has been slow more recently. The other segments internationally, especially in China, are going quite nicely. So it really depends on what you believe this business can be doing, especially with innovation. There was a failed product launch, so for 2025, they will definitely have to do much, much better. Let's discuss this quarter figures in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe. If not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. As always, 2 extra things here. One, the average analyst price target going into this report was, well, close to 7% lower than the price we were at before the reported earnings. As for some pricing metrics, so if we look at the 5-year mean, it is much lower. Forward PE, EV to EBITDA, price to sales, price to free cash flow. But if you look at price earnings to growth, we're already sitting at 2.28. So yeah, it's not the cheapest one anymore. All in all, shares outstanding in the past 5 years have come down by 5.7%. And so looking at the major overview here by Consensus Guru, so revenue up 8.7% year over year, beating the estimated number by 1.6%. Gross margin beat that consensus number by 98 basis points to 58.5%. Operating margin of 20.5%. That's up 514 basis points year on year. EPS is up 13.4% year over year, beating the consensus number by 5.9%. Then if we look at the comps here, Americas down 2%, China up 27%, rest of the world up 25%, and inventories at 1.8 billion, which is 3.7% better than what was expected. With regards to Q4, small misses here, right? Small misses for revenue and for EPS, a miss of 1.2 and 1.4%, still growing revenues 9% year on year, and EPS 5.9% year over year. All in all, this is basically Lululemon's performance, revenue and free cash flow wise in the past and what's expected in the future. As you can see, free cash flow is expected to be down for fiscal 2025 by 15.2% and then grow by 9.1% in fiscal 2026, only to drop again by 2% in fiscal 2027. Of course, if they show signs that, well, the North American business is growing again, then maybe those things might change. As you can see here, this is basically the big segments: Americas, China. Well, in this case, I also included Canada, but Canada is basically Americas. Rest of the world apparently did not want to feature on this picture, but that one was up 26.6%. As for the product revenue, women was up 8.5% year over year and men 9.2%. But as you can see right here, we did see a drop in men's products revenue quarter over quarter. But all in all, since February 2020, women's product revenue has increased by 65.7% and men's product revenue basically almost the same thing. So if they can succeed in growing the men's part of the business, maybe even the shoe part of the business, I mean, combine that with reacceleration in growth in North America, maybe it's going to be worth paying the price. If we look at company-operated stores in the United States, in China, Canada, Mexico, Australia, UK, South Korea, and all the others, overall, they added around 28 new stores. The big increase here comes from Mexico. They added 14 stores there this quarter. And here you can basically see their rapid growth in China since, in this case, February 2020. They grew there by 315%. The other one that also grew quite a lot is South Korea, but that's much, much smaller than China. And so if we do a quick reverse DCF with this one, we plug in all the necessary numbers, free cash flow trailing 12 months, close to $1.7 billion. We can see that to justify the price after hours, free cash flow will have to grow 7.3% in the next 10 years. This is the tricky part because we've just seen that that's not the case, right? We've seen that it will decrease, then increase, and then decrease a little bit again. So right now, I would say it's not worth it. It's not worth paying the price that, well, the market is giving us right now. Although the market does seem more positive today than it did 3 months ago, yet 3 months ago, the stock was probably cheaper than it is right now. So yeah, for those that did buy the dip a couple of months ago, the dip was more like a crash than a dip. Congrats. For those trying to buy right now, well, this is basically what you're paying. This is what you are paying right now. Again, if they can manage to turn the North American business around, new products, refresh all of that, increase demand, men increasing as well, then yes, then maybe we could see a reacceleration in free cash flow growth. That would make sense. If not, then it's a pass for now. And so right now, as you can see, since the bottom back here at the start of August, up until the, well, price after hours right now, the stock did rebound by 66%. Some very, very good momentum with the stock above all the moving averages here, 20, 50, and the 200-day one, especially in the last week. Big fat green candle here. We might be overbought on the weekly, but then again, we've seen plenty of other stocks that have been overbought for a long period of time that didn't really stop the momentum of a stock. Now, closing in on that $380 mark, we can see that previously that was an area where the stock did stay flat for a long period of time. Could that be an area where the stock again forms a base? Remains to be seen. And so, overall, strong quarter, good quarter for Lululemon. Of course, the quarter that we're in right now, holiday season, should be another strong quarter for them. Is the stock just too far ahead right now? Is a lot priced in? Maybe so. But overall, they did show time and time again that they are not like the rest. They are a special yoga pants making company, believe it or not. So yeah, that's all I've got to share right now. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and definitely tell me if you've been buying Lululemon stuff, yes or no, do you like their products, all of that in the comment section below, and I'll see you all in the next one. Bye-bye.